Good afternoon. Welcome to this afternoon's discussion. Now, the Armchair Trader has assembled a panel of experts, and we're going to be talking you through a big issue, the state of uranium. We're looking at how the price of uranium relates to one of the biggest and most debated issues of our time. Of course, we're talking about climate change, the challenge of reaching carbon targets. It's a complex issue, and inevitably there are many areas that we will be investigating this afternoon. We're hoping that this session will give you the chance to get an overview. There will be plenty of opportunities to ask questions afterwards on the website. We'll have a special forum dedicated to this. But this is an opportunity to hear some of those main points. Now, what we are looking at, the Armchair Traders Uranium Forum, the panel here today will be available to answer those questions and expand on these issues further. And we have that panel here for you today. So I'm delighted to welcome today. We have got Randy Bell, who's from the Atlantic Council's Global Energy Centre, joining us. We also have this afternoon Peninsula Energy CEO Wayne Heili, Yellow Cake Plc CEO Andre Liebenberg, and we'll get a different perspective on this from each of them, looking at where uranium fits into the global environmental challenges and what this potentially means for its future price. Before we hear more from our distinguished experts this afternoon, let's talk to the Armchair Trader's own financial journalist who's been investigating uranium. Now, Stuart Fieldhouse, you've been exploring the price, the investment opportunities, where to invest. Stuart, first of all, why uranium?
Well, uranium was something that I really only came across this year. I was down in South Africa in January at the big Mining in Indaba conference, and one of the presentations there was about uranium, and it's a fuel that's entering a particularly interesting time right now because it's been trading at around sort of $20 to $27 a pound for quite a long time. Certainly since the Fukushima nuclear reactor meltdown in Japan, there's been a lot of sort of negative publicity about the nuclear industry, and there's been a lot of talk, particularly here in Europe, about countries like France and Germany taking reactors offline, and that's created an impression, certainly in my mind, that somehow uranium and nuclear was going to become part of history. But the fact remains now that we've got a situation where many countries are now re-examining nuclear power as a medium-term option, alternative to polluting fossil fuel power plants running on coal, for example. Not everybody's in the same position as we are in the UK, where we can generate so much more power from alternative energy sources. So a lot of developing countries are looking at uranium now and at nuclear power as an alternative. And then the other aspect of all this has been the fact that some of the big mines, which I'm sure the others will talk about on this program, have been taken offline recently at about the same time as it looks as if there's going to be actually more demand for uranium. So you're in a situation now where there's less being produced, and at the same time potentially more consumers. So as a consequence of that, you've now seen the uranium price has actually risen from around about $26 up to, I think today, around about $32, $33.
It's interesting as well, isn't it? You know, before COVID, our carbon footprint was probably the area that everybody was talking about. People are passionate about where they get their energy from, the impact it has, and, you know, how, I suppose there's a big challenge in terms of how nuclear energy is perceived.
Indeed, that is the case, but it is. I mean, if you look at the US, for example, they have a very large fleet. They call them fleets, these power stations. They have a large fleet of power stations which have not been contracting for future uranium requirements. And if those power stations are taken offline, it seems to me that they will have to scramble around to find alternatives to keep the lights on. So it is it's going to be, you know, a pressing issue. From an investment point of view, this is not a market that is traded like some other metals. There's not an open exchange where uranium is bought and sold, so it is traded between participants in the actual industry. So there is less transparency on the price than, say, something like copper, for example. But today in terms of the panel, we've got together. One of the speakers is from Yellowcake, which is a actual listed company that just holds physical uranium. So when people are sitting there thinking, yes, but how do I invest in this sector? One type of investment is something like that. You have an investment company holding the actual uranium, and then the other one is obviously companies that are involved in this business as well, which is why today we also have Peninsula Energy from the US, which is an actual uranium miner, who will also be presenting.
And that's, these two companies that you mentioned, so we've got Peninsula Energy, we've got Yellow Cake Plc. Why these two specifically? You've obviously done quite extensive research on this.
Well, Yellowcake is interesting because it is as pure a energy play as you're likely to get, short of actually having your own uranium in the back garden, which we wouldn't recommend. So that is an actual, if you want to invest in the actual metal itself, that's as close as you're going to get, basically. With the uranium mining, there are some very big uranium miners that are listed companies, but at the same time, as we've already mentioned, their mines are not producing right now. But also, I think something like Peninsula is just an interesting company because it's positioned in that key US market that I've already mentioned, and the US, as we know, they will tend to sometimes prioritize where they source their uranium from, so they don't want to rely on producers in, say, for example, China or Russia or Kazakhstan, and a uranium miner that's sitting there in their home market is obviously much better positioned from the perspective of US buyers.
And the price at the moment is low.
The price historically is looking relatively low. It's still only at about $33. It has in the past been able to get up to, I think, dollars. You can see that on the chart there, but that gives you a good illustration of where we are right now. And it also shows you where, if there's a squeeze in the uranium market, and we're beginning to see the start of one now, that shows you exactly where it's potential to go.
And of course, as we said, this is quite a complex issue. There's lots of questions that potentially people might want to ask, and you are happy to take those on the website later.
Yeah. So after the end of the webinar, if anyone has any questions that they want to put to any of the speakers, or indeed to the team here at the Armchair Trader, we have a forum set up on the website. I think there will be a link at the end of the show. And you can put your questions there on the forum, and we'll put them to the various speakers.
Of course, as we've been saying, a huge issue, the whole issue of climate change and targets. Let's now bring in Randy Bell of the Atlantic Council Global Energy Centre. Now, Randy, the challenges are huge, aren't they, when it comes to the world's energy, carbon goals, just 30 years from now for 2050. What part does nuclear power play in this?
Right. So you're absolutely right that the climate challenge is immense, and decarbonizing the power sector is one of the biggest challenges. Now, we've seen a lot of progress in lowering the carbon footprint of the power sector in the United States.
Well, of course,
and it's actually...
As soon as we can get that link going, we'll bring this in. But as we were saying, Stuart, this is an issue, isn't it, where nuclear power is significant in the future in terms of lots of ways of looking at how those carbon targets can be met. We're talking about that. We will hopefully talk, as we say, we have a number of people that will be adding to this discussion. So let's bring in Randy in this. Hopefully Randy can hear us now and talk about the impact that when it comes to those energy and carbon goals 30 years from now for 2050. Randy, hopefully you can hear me now. What part will nuclear power play in this?
Yep, I can't hear you. Can you hear me? Can you hear me? My audio and video are on, so I'm not sure. I'm seeing other panelists nodding. Yes, you can hear me. So great. So as you said, the climate challenge is enormous, and the aim to get to net zero by 2050 is quite ambitious. The power sector is, in much of the world, the largest source of carbon emissions. And so decarbonizing the power sector is crucial. What we've seen over the past decade or so, particularly in the United States, is though you've seen the power sector emissions drop, that's predominantly because coal power has been replaced by gas and renewables.
Should we see if we can link up to some of our other panel this afternoon to see if that works? Unfortunately, a few problems, but hopefully coming back to that in just a moment. Now, of course, we were talking about the couple of names that were mentioned there by Stuart. Let's see if we can get the Yellow Cake Plc CEO Andre Liebenberg. Andre, can you hear us?
I can hear you very clearly, and I can also hear Randy.
We're unable to hear him here, which is unfortunate, but we can hear you. So let's bring you in on this then this afternoon. You know, in terms of Yellowcake, just tell us a little bit more about you and what you're doing at the moment.
Yeah, so Yellowcake is, I guess, in its simplest form, it's a physically backed ETF, but in a corporate vehicle. So if you look at our balance sheet, we've got 9.3 million pounds of uranium, which is stored in a regulated facility in Canada, and we've got about $16 million of cash. That's it. We've got 2 employees, a non-executive board. We don't have a permanent office, so we're well suited to working from home. So it's a low-cost structure that's set up to hold physical uranium for the long term, and give investors the opportunity to invest in the uranium price, but through the Yellowcake shares. So you know, the aim is to have as little leakage as possible and provide the exposure for investors. Because as an investor, it's very difficult to own physical uranium. It would involve setting up accounts at storage facilities, which is not cheap, and there's all other forms of regulation involved. So this is a very simple way to give investors an opportunity to invest in the uranium price.
And at the moment, that uranium, I understand, is below market price. So stock is at a discount at the moment.
That's right. Our stock has been trading at a discount to its underlying net asset value, which actually makes no sense at all. I mean, if we talk about the balance sheet that I've just mentioned, we've got uranium, which is one step away from cash, and we've got cash. And yet the shares were, until very recently, trading at about a 30% discount to net asset value. Now, in order to address that, we last week sold a little bit of uranium, 300,000 pounds. And I guess that proves that the uranium is one step away from cash, because we sold it pretty easily and we got the market price. And we're utilizing those funds as of yesterday to enlarge a share buyback. So by buying our own shares, we're effectively buying uranium at a discount to the underlying spot price through our net asset value discount. Now, helpfully, we've seen that net asset value discount close, 7, 8, 9% over the last 10 days on the back of our announcement. But yes, we are trading at a discount, and it doesn't make any sense at all.
You're clearly really optimistic about the role that uranium will play in the future.
Yes, and I guess being a physical player for us, having spent the last 20 odd years in the commodity markets, it's about supply and demand, and it's about your entry point. commodities are cyclical, they go up and down. So when we set Yellowcake up, what we had to convince ourselves was that uranium was closer to the bottom of the cycle than the top. And that chart that was shown up earlier, one could see that in 2016, uranium traded as low as $17, $18 a pound. And back in 2007, it hit $130, $135 a pound. So, we sort of not that involved in the philosophical, political arguments about uranium, but much more looking at supply and demand. And what Stuart mentioned earlier this year about COVID-related supply impacts, that really, the supply side has been a theme that's been emerging, from 2016, not just this year. We really do think that the supply side is constrained. Very little investment has gone into the supply side. With the crisis, the financial crisis that we've got now, the impact on global GDP, we think it's going to make it harder for new mines to get financing. And unless that happens, new supply doesn't come on stream, we think that the uranium price has to go up to induce that new supply. By our estimates, we think that the cost of new production is probably around $50, $55 a pound. And even after the recent rise in the uranium price, we're trading at, the uranium price is $33 a pound. So we do see a lot of upside, structural upside in the uranium price, and hence setting up the vehicle and creating that exposure.
It does sound like there's quite a challenge ahead in terms of, you talk about the increase in demand and then meeting that demand once things start to take off. People think that when you need supply, you can just press a button and it's delivered. To take a mine from exploration all the way through to production can sometimes take up to 10 years. So it's mining companies try and anticipate future demand and set their production centers up to come on stream when that demand is there. But it's a long time frame. And if the financing's not there and the investment's not there, we are going to see a supply squeeze, because it's not an industrial process where you can add an extra line to a factory or press a button and the material's available. In terms of, we were talking about that discount price, about things being quite low at the moment. So in terms of how quickly that will go up, do you have any ideas there? Have you thoughts on that? Well, commodity markets tend to, they don't go up in straight lines. That previous graph will show you that. Back last year, the uranium price traded $26 to $24 in a very narrow range for pretty much the whole year. And then early this year, it was trading at the bottom end, $24. COVID comes along and a few production centers are impacted, and the price shoots up 40%. I think uranium is probably the best performing commodity this year, which it happened in a period. So these things can react very, very quickly. Well, thank you for that. You are, of course, happy to take questions afterwards on the website. Now, are we going to have any luck? Let's see if we can talk more about this with Randy Bell of the Atlantic Council Global Energy Centre. Randy, just hoping that we can hear you this time. It's a really interesting discussion and, an absolutely huge issue. We were talking about the massive challenges that we have when it comes to energy and carbon goals just 30 years from now for 2050. What part does nuclear power play in this?
Right. Well, first, can you confirm that you can hear me? I know the others could. So I don't think you two can hear me, but can the other two panelists are giving thumbs up that they can? Yeah. So not sure how we proceed, but I will talk until you cut me off again. What's crucial about nuclear for meeting our decarbonization goals is first that it's baseload power, and it has a very high capacity factor in the United States, over 90%, where renewables, which are intermittent, therefore have a capacity factor wind above 30%, and solar in the 20s, depending on where you are geographically. So nuclear solves an electricity problem, an electricity system problem, in a way that renewables don't. This is not to say that there's not an important role for renewables to play. They really are complementary, and particularly as new advanced nuclear technologies become able to ramp do a better job of ramping to manage variability. But you showed a slide earlier that indicated a number of plants that are being built and a number of countries that are interested in building nuclear. What you're starting to see with nuclear power is a change in the environment, in the perspective of nuclear power from the environmental movement, where previously the environmental movement has been adamantly against nuclear power. And that is still the case in some quarters, but as folks recognize the need to decarbonize the power sector, but also decarbonize the industrial sector, where nuclear can provide process heat for industrial processes where electricity and renewable electricity really can't fit the bill. You're starting to see that momentum change. And every time, and you'll see that, for instance, in Germany, as they've shut down their nuclear power plants, their carbon footprint has gone up. That's a case study in why shutting down nuclear is bad, and that people are learning from that and changing. You know, you'll see in the United States, the Democrats released a climate plan just last week. The majority staff in the Congress, which included nuclear, which many folks were quite surprised by, but they recognize that there's a need for nuclear. If anyone paid attention to the Democratic presidential candidate debates earlier this year, there was a marked divide between some of the candidates who are against nuclear and some who are for nuclear. But it's worth noting that when Vermont Yankee nuclear power plant closed down, where Bernie Sanders is from, the carbon footprint of Vermont went up. That's not gone unnoticed, and you're seeing a real change in the attitudes. That is coupled with a remarkable development in new technologies. You have the small modular reactors, which are have range and scale from anywhere from 60 megawatts to 200 or so. But they have much lower upfront capital costs than the large light water reactors that we've seen built over the history of nuclear power, which often are 1,000 or 1,400 megawatts. And so much lower upfront capital costs, which is often a restraint for developing nuclear power. But also small modular reactors can go in places where you wouldn't have put a nuclear plant before, where grids aren't big enough to necessarily support 1,000 megawatt plant, for instance. They're potentially useful on small island nations, for much smaller countries. In the United States, the island of Puerto Rico is now looking at small modular reactors with the NuScale project. And you see any number of countries really engaging in this. Secondarily, you see a whole range of advanced technologies that go beyond the traditional large light water reactors that are of a larger scale. And these advanced technologies manage some of the concerns that people have with nuclear power. Those include the nuclear waste issue, where advanced technologies produce far less waste and can actually recycle and reuse some of the waste that's already out there. And they're far safer. They have passive safety. So if there's a problem, safety features kick in automatically. They don't need active safety features. And finally, they're more proliferation resistant. So they manage some of the concerns that some people who are worried about nuclear have. So given the need for zero carbon power and the importance but limitations of variable renewables, nuclear will play a crucial role in meeting our climate goals, and at the same time, new technologies can mitigate some of the risks that people saw with nuclear in the past. So I really do see that there is going to be a future for nuclear. And I'll end with one final note, because people are concerned about the costs. And this ties back, the cost of nuclear, and this ties back to some of the concerns about climate change. There's the Energy Information Agency in the United States put out a study a few years back that showed that nuclear was cost competitive with renewables, with gas, and with coal if there was just a very small carbon tax. And with a very small carbon tax in the United States, the economics suggested that there would be new nuclear builds in the United States by 2030. So whether a carbon tax is a feasible policy option or not, the recognition that if you value nuclear zero carbon attributes in one way or another, nuclear makes economic sense for the power system, I think is something that is often actually lost on people. And I've wrapped up.
Right, thank you very much indeed, Randy Bell from the Atlantic Council Global Energy Centre. Now, please do visit the website. If you have any further questions that you might have, we will be very happy to take a look at them to answer those throughout the afternoon, so the discussion can continue. Now, let's take a look at what this means to one of those stocks that Stuart mentioned earlier, Peninsula Energy. Wayne Heili is their CEO. So Wayne, you know, what do you make of what we just heard there? What does this mean for you?
Good morning. I hope you can hear me well. I think Randy did a really nice job of summarizing a few key principles. First, that access to affordable electricity is a key indicator of the health and longevity and quality of life. And availability of electricity is accepted rather universally as a good and desirable feature in a healthy society. Second, that climate change is undesirable. Everybody likes to complain about the weather, but overall, we don't want or welcome change, and especially on the scale of our global climate. And finally, third, carbon-free electricity is valued better than fossil fuel generated electricity. It all works the same, but we have come to a point now in our society that we feel better about lowering our carbon footprint. So to solve the climate crisis, governments around the globe are establishing goals of reaching net zero greenhouse gas emissions by the end of the first half of this century, or in other words, before it's too late. And investing in nuclear energy infrastructure is becoming a priority in many nations, including the United States. Nuclear power is a zero carbon source of electricity, and it made up 20% of the US electric generation in 2019. Now, recently published US government reports recommend that the nation ensures the continued safe operation of its existing nuclear fleet, and that it invests in the next generation of nuclear energy. That investment, I believe, should start with ensuring a reliable domestic nuclear fuel supply chain. Simply put, the U.S. has lost its former position as a global leader in the nuclear power sector. The domestic uranium production has been in a long decline, and that's really due to competition from foreign and generally state-owned entities that have been selling uranium and fuel components at unsustainably low prices to gain greater market share. Today, there's a massive structural supply deficit created by over a decade of low pricing. Primary mine supply has eroded to a level that cannot meet current demand, much less the growth in demand that's projected to account for the recognized need to generate clean electricity. Secondary supplies have been filling the gap. They're effectively drawing down inventories of previously produced uranium, and that's not sustainable in the long-term solution to this issue. Over the medium-term time horizon, uranium prices simply must move higher to incentivize production of new uranium for the market. And Peninsula, with our primary assets in Wyoming in the United States, is now one of the best positioned companies to take advantage of this opportunity. The image that you see, I presume the slides will be up, is of the Peninsula's Lance project in Wyoming. It's an ISR, in situ recovery mine. And as you can see, we're using state-of-the-art, low environmental footprint methods to recover uranium for the use in the clean energy, nuclear-powered world. This is actually the mine site and the portion of the mine site where we're producing uranium from. On the next slide, you'll see Peninsula's Lance project is more than a shovel-ready uranium mine. It's a recently constructed, fully licensed uranium mine and milling facility with the largest resource base of any current or recently operated U.S. uranium project. Although the project is currently idled, we continue to progress a significant program of technical optimization and de-risking at the site. We intend to resume production using the same low pH in situ recovery chemistry that's employed at the world's lowest cost uranium production facilities. That's important because we're the only U.S. uranium ISR project that's licensed to use the low pH chemistry. And this is expected to provide us a considerable economic advantage in the future when we're producing. Significantly, we have a very low capital investment requirement to resume production and a very short post-investment decision timeline of only 6 months. The company leads our sector too in the uranium sales contracts at or above market pricing that extend out to the entire decade to the year 2030. And as of the start of this month, Peninsula is now debt-free. We have cash on hand with our projected revenue stream of over $20 million in the next year to carry us forward well into 2022. My view, investors looking to gain exposure to the upside of uranium market should include a few selected stocks that are revenue generating and can potentially grow their share price in multiples of the growth of the uranium price. Peninsula, as a uranium mine developer, producer, and seller, includes exposure to the unique market opportunities of the developing U.S. government uranium buying program. This program, that's likely only to be available for U.S. domestic producers, will provide a new source of competition for U.S. origin uranium. The U.S. Congress is currently considering funding mechanisms for the purchase of up to 150 million pounds, or $150 million annually of uranium to establish a U.S. uranium reserve. I think when you look into it, you'll find that Peninsula has excelled in developing all the right attributes for your investment thesis.
This sounds, you sound incredibly optimistic in terms of when you can reach a meaningful production rate and the capital that you need to do that. What are you thinking in terms of timescale?
Well, our company has not made an investment decision to resume production. We are idle, although we have the capacity to start production in very short order. Following an investment decision, I think we'd be into meaningful production within 6 months, and we could be up to our full production rate a little over a year afterwards. The capital requirement to resume production on our project is really minimal. To get the project back up and running, it's probably on the order of $6 to $8 million. And then, before we have full revenues from the additional production, we'll probably invest another $10 million into a new mining area, a well field for the project. So, we're not talking about big money. This is a built and developed mine. It just needs to be restarted. And it's been recently built. It was only built in 2015. So it's a modern facility capable of uranium production.
So we've been talking about those low prices and how that has held things back. What is changing so dramatically then? We're hearing about the the climate and our carbon footprint and the general mood at the moment. Is this what's changing things so dramatically?
Well, I'd say that COVID-19 has had a pronounced effect on the uranium market. One of the world's largest mines was shut down. That took about 18 million pounds of annual production, or 10% of the annual production, out off the map. And around the world, countries like Kazakhstan are presently enduring a rather hard time with the COVID-19, and they've reduced their uranium mine development activities and production activities. So they're significantly reducing their uranium production. That accounts really for the price increase that we saw and that was recapped earlier in the presentation this year, where the price moved from 24 to closer to $34 a pound, almost a 40% increase. That increase seems to have taken root and is stuck. The pounds that are not being produced are not going to be available for the market, and it is going to take significant time and effort to bring those pounds back online. Uranium mines don't get built in a day, and they don't get restarted and back up in production in a day. The uranium market is transforming into a market that's going to be short of available supply, and the next year or two should be very interesting.
And of course, COVID-19, it's not an issue that's going to go away, is it? No one knows quite what's going to happen there and what challenges will be faced in the future.
I hope it goes away. I'm not an expert on that. We'd rather have the world healthy and producing at a norm. But the impact that COVID has had on the uranium market is going to be an impact that lasts longer than just this short term.
So from what you're saying, really, there's a real sense for where you're at, of optimism for the future.
Certainly, it's been a challenging uranium mining environment with the price of uranium below the cost of production for the vast majority of uranium mines, which is why so many mines have curtailed their production levels or simply shut them off. We're waiting for the price to rebound past our price of production. Today, many of the uranium mining companies are using the uranium market to fulfill their supply contracts. It's better to go into the market and purchase and sell than it is to produce and sell. That has to change, because it is unsustainable to have uranium mines not producing. The world needs the uranium for the production of clean nuclear energy.
Well, you are, of course, thank you for joining us. And you are, of course, available with more questions. You can visit www.thearmchairtrader.com. Any further questions that you would like to put to our panel this afternoon, we will continue the discussion online as well, and expand these areas of discussion. So it's www.thearmchairtrader.com. You can also sign up for a daily newsletter to keep up to date with all the developments. Now, we're finishing today's discussion by welcoming a very special guest onto the discussion. We will talk to someone who has become very much our ambassador for climate change awareness, and hoping that we can link with him at the moment. If not, we should be joined by him in just a moment. But that reminder, we've heard from all our panelists this afternoon, so do continue the discussion on our website, www.thearmchairtrader.com. A lot of issues to discuss and expand on. And if you would like to put your points, then we will have our panel with us throughout the put back in on this. So really interesting discussion. And, people, there does seem to be quite a sense of optimism here this afternoon.
Yeah, I think the interesting thing about this, I mean, obviously, if you're a uranium specialist, you know all about this already. But certainly for me, coming to it from someone who's written about a lot of commodities markets over the years, I never really fully appreciated the potential within this market for the actual raw material to run out so quickly. The thing that struck me about it, and one of the key aspects that struck me about it, is unlike oil, for example, uranium takes, this is something Wayne's already touched on, uranium takes a long time to get to the point where you can actually put it into a power station. From the ground to the power station, that takes a long time. And there is, certainly from the data that we've been looking at, there is definitely an impression that some of these, certainly in the US market, but I suspect elsewhere in the world, these power stations are running through their existing contracted stocks at a time when the big mines are actually not producing anything. So although we're already seeing the price at sort of $33, I think there's going to be some kind of a squeeze further down the line once these buyers come back into the market.
And of course, talking about time is of the essence when it comes to targets, carbon targets, and 2050. It's not that long away, really.
No, absolutely not. And the thing that investors need to bear in mind is, whereas you'll see in the headline news, there's a lot of discussion, as I've mentioned, in countries like France, of taking their nuclear power capacity offline. You've got to appreciate the fact that there are other parts of the world, like, for example, the Middle East and Africa as well, where you have a staggering number of new nuclear power stations, either actually in the construction stage or they are in the planning stage. But I think, off the top of my head, I think there's something like 100 power stations of various sizes that are currently in the planning stage. So even where you have the West European nuclear energy industry not winding down, but certainly reducing quite rapidly, you are going to see more demand for this coming from other parts of the world. Part of this market is a little bit difficult to gauge, because there are large stocks of uranium in Russia and China, and we don't know exactly how much they have or how they're going to use that. But from the perspective of the Chinese, a lot of their stocks, I suspect they'll want to use with their own domestic nuclear industry. They're not about to do what they did with steel, which is dump it on the market and drive the price down. I think with uranium, they're going to want to try and exercise more control over that and keep that within their borders.
It's interesting, isn't it? Because it's, we talk about these huge challenges, and it strikes me that it needs to be a very much joined up approach. People can't operate in splendid isolation.
No, that's absolutely right. But again, one of the reasons why we like Peninsula is the fact that the US market has to prioritize its own production and access supplies in North America. The great thing about Peninsula is it is a uranium mine. It is sitting in the US. It's right there, at the right place at the right time. So it is a very interesting stock in that respect.
If you could hear me, I'd love to add a comment onto that.
Questions as well by going onto the website. This is going to be a discussion that continues sort of online, regular updates on newsletters as well.
That's absolutely right. At the Armchair Trader, we cover a lot of different commodity markets, but uranium, certainly since the start of the year, has been something that we've become a lot more interested in. If you sign up to our newsletter, you'll be able to get a daily update on what we're looking at the moment, but we'll certainly be revisiting the uranium theme over the course of the rest of the year. And as I think we mentioned earlier on, if you want to ask any questions of any of the speakers, we have a forum on the website. You don't need to sign up specifically for that, but you can address these questions to them by just posting on the site, and we'll endeavour to get responses. I think Randy wanted to say something as well, though. So, Randy, do you want to come in with something?
Yeah, just a quick note, adding on to what Wayne said, what you were talking about just recently, how the U.S. has specific needs for domestically produced uranium. There's been a debate in the United States over the past couple of years about the need for domestically produced uranium, with the nuclear power industry really pushing back against that need because they wanted to keep prices down, because they were economic. They need to keep their reactors as economic as possible. However, you have two legislative requirements for domestically produced uranium. First is tritium for the nuclear weapons fleet, and then second is highly enriched uranium for the nuclear navy. Now, there's right now enough uranium, enough stockpile to last, depending on who you ask, for 10 years or 20 years or 30 years. However, that doesn't actually produce. What we'll do is we're losing. We have lost really the ability and that industrial capacity to produce that uranium. And so, just recently, the administration has released a report of the Nuclear Fuel Working Group, which I think found a very elegant solution to this problem, which is a way of making sure that the uranium stays relatively inexpensive, though for the U.S. nuclear fleet, though with the exception, of course, that there is this global market that we're seeing COVID impact now. But outside of that, by having the U.S. government itself get involved in making these purchases, recognizing that there is this need, that there are national security reasons for the U.S. to be a leader in the fuel cycle, at least the front end of the fuel cycle. We'll see about the back end. But for the U.S. to be a leader in the front end of the fuel cycle, for both national security reasons and economic security reasons. So I do think we're going to see more action in uranium in the United States in a way that we haven't over the past few years, simply because of this policy change. And I do think that if there is a change in administration with the election in November, I do think this will probably carry simply because the folks who are advising the Biden administration are on these types of issues are in relatively the same boat and see it the same way.
Thanks, Stuart. I think Randy's said
I'm finished.
Thanks very much indeed, Randy. That was great. I wanted to basically, I think it's time to wrap up now. Thank you very much indeed, everybody, for joining the webinar today. Apologize for any technical problems that we've been experiencing, but I hope this will be the first of many from us. Sarah, was there anything else you wanted to add?
I think as we say, it's a really interesting discussion. Lots of different areas that people can go down and just join in the conversation online. It's just been really interesting hearing what everyone's had to say this afternoon.
And just a reminder, if you have any questions, please go to the forums on yellowtrader.com, where you'll be able to put any questions to any of the speakers.